Okay, hello guys. Yeah, in this video, we'll be breaking down this trade that I took on Gbpcad. This video is not gonna long. I just want to show you the breakdown and the consistency in the approach. So I hope this video will help you in one way or the other. So let's dive into it. This is the trade. I execute this trade in 4-hour time frame, but I did my analysis from daily time frame. So let's start from daily time frame. First of all I want to see is daily structure mapping, and if you can look at it this way, this seems to be the first high that the market created, and this seems to be the last low that the market created. And if you look closely, I didn't just take this low, I took this low because it's valid. So if you look closely, my inducement for daily time frame inducement is here, and if you see how market reacted, probably market reacted to this other flow. And if you want to scan down to see the other block that actually pushed the market, this is the only valid other block with fair value gap. So you see that the process remains the same every day, every time. Okay, this fair value and this other flow has been mitigated by this pullback. So market actually came back to respond to this, but to this other block. So and it gave us momentum to the upside. But the issue is this market do not close above here. So it means that when the market refused to close above your high, what it actually did was would be a liquidity grab, and probably market need more liquidity to push above if the market want to go up, or market need the temporary pullback. So and you can see that's what the market did here. Market came back for this liquidity like this. So but based on my plan, whenever I see something like this, it's not break of structure confirmed for me. So I will look for the last pullback that the market did. So at least market need to come and take out that one, and then look for my other block if market is going to respect it. And you can see this is exactly the last other block that the market created with fair value gap in between, and market responded to it. So a market push up, and finally we had a break of structure. But look at it again, market do not break this structure here. It actually created sweep the way it did here. So it means that we need a temporary pullback. But in this case, market do not grab any liquidity. But in lower time frame, probably market took out this liquidity and make another attempt and did the same thing. And finally, market break this structure by doing what? By closing above this level. Not above here, but above all the sweep that it did. So that's when we can now confirm, say, we had a break of structure. But the misconception is some people will say, now that we have a break of structure, probably this level will be their low. No, this is not their low. So what we have here is this impulse correction, then market push up, then we are expecting the pullback. And so this is how it look in the normal way that we've been taught. But in the mechanical way, this low will remain our low, and this high is now confirmed here. So now where is our trading range? First of all, when the market confirmed this high, you can see this is the last pullback that the market did when it finally broke above that high. You can see this is the last pullback that the market did. So we will mark this level as our inducement, then put it daily inducement, and immediately market take this inducement out, then we can have our high here. So this is going to be our trading range between this level and this low. So now what next are we supposed to do? All we need to look out for is, you can see this extreme order block has been mitigated. So it means the market is not likely to come here, and all we need to do is to look for the other block that is valid. So after this inducement, no any other block that is valid until only this one. So based on my trading plan and my experience, I knew that if this other block fail, then there's tendency that this low will be weak and market is likely, because I can't find any hidden POI anymore. So market is likely going to sweep this low before it continue the momentum to the upside, or market is going to change character. But based on that, when I see this mitigation, all I do is to go to my 4 hours. All I do is to go to my 4 hours and trade in the direction of what higher time frame is doing. So what I do is I go to 4 hours first and I see if I have a clear structure responding to this higher time frame POI, then I will execute on 4 hours. And if it's on 1 hour too that I have a clear structure, then I will execute on 1 hour. Those are my two lower time frame. I don't go below that based on as a swing trader. So, and as you can see, when market just give us a consolidation here, and finally market push up like this. Why I mark this level as a kind of change of character? This is not a change of character, but based on I want to see a response from here, and you can see market creates kind of structure and market broke up to the upside. So systematically, I can say in 4 hours we had a change of character here. So I will pay attention to what the market is actually doing, and as you can see, market creates an inducement here, 4 hours inducement here, and market came back for it, kind of mitigates this level, this other block, and push up, and did what, and close above here. So we're supposed to mark this level as our break of structure. If you watch my video, the last video I dropped on YouTube explaining this, we're supposed to mark this level as our break of structure, but because there is no inducement that the market created, and market refused to create new pullback for us, so it means that this low is not going to serve as our low, but is going to serve as where the new liquidity is resting. So it means that these are 4 hours inducement. So then this other block has been mitigated. So we need to look for other block at the extreme if there is any. And as you can see, this is the only other block that we had. So instead of using this low, some people will say change of character and be looking for sell. That sell will be short-lived because it's not the directional bias of where the market is going in the higher time frame. And as you can see, if you execute the trade from here, if you execute the trade from here, when market mitigate this level, do not put your stop loss here based on this thing. Then I would like to put my stop loss below the structure because the stop loss is not that wide. So, and you can target here easily. But me, I only target 1 to 3. I don't want stress. So I target 1 to 3 for consistency purpose. So, and as you can see, market do its thing and finally market broke up. So this can now be a break of structure for us in 4 hours. So this is confirming to us that this daily POI is holding because 4 hour structure is also forming in that direction. So when I saw this and I saw the market consolidating, so this is where I saw the market when I positioned for my own entry. And you can see market gave us, this was the last pullback that the market did, obvious last pullback that the market did. So this will serve as our 4 hours inducement. And what next am I supposed to do? This is going to be our low, 4 hours low. Then where is our 4 hours high? This level. By then market has not created this one. So it means that our trading range is between here, between this high and this low. So what am I supposed to do? After I identify my inducement, I identify my order block. This is my order flow. So this is the order block inside the order flow. This is the valid order block inside the order flow. Remember, order block, order flow, they are POIs because market do not promise you that this the one is going to respect it. What market really care about is the liquidity. So order block is a refinement of order flow. So most people don't really understand the order flow things and the order block thing. I have it in my video. I think I have explained something about that order block and order flow. Order block is a POI, order flow is a POI. Sorry, hold on. So order block is a POI, order flow is a POI. So a lot of people don't really get that. So what I did was to position and I looked below. I didn't see any other block, no valid order flow except this hidden POI. So based on my plan, my strategy, when I look at it, he asked me to execute this at this decisional POI. So being the only order flow and the only order block that is valid. So I had to execute and take a risk, apply my risk management. I execute around this level But I did not put my stop loss here. I had to put my stop loss below this other block. And then I target 1 to 3. And you can see how nicely the market went there. Market gap to my TP directly. So this is how I execute that trade, and it followed the same process over and over again. Once you understand the directional bias, then you can trade towards that level. That will give you high win rate instead of just coming to the chart without a plan. These are pre-planned setup. I've marked it days before the market actually came to this level. And immediately market got there, no time to think, no time to analyze, nothing. I just execute my trade, then allow the market to do its things. So that's it for this video. Hope you learn one or two things. Bye for now.